Stock market investors may face a rude awakening, and social media content moderators get PTSD. Today, I read an interesting article on Yahoo Finance, put out by Business Insider and written by Theron Mohammed, titled, Warren Buffett Tells People to Buy an S&P 500 Index Fund. A celebrity tech investor says they face a rude awakening. The author of this article referenced Chamath Palihapitiya, who said, "This needs to be fixed or it will end in disaster." The venture capitalist and co-host of the All In podcast said this needs to be fixed or it will end in disaster. He referenced a chart posted on X by Kevin Gordon from Charles Schwab, which showed the 10 most valuable S&P 500 companies accounted for 39.9% of the benchmark index's total market cap on December 20th. Apple, Nvidia, Microsoft, Alphabet, Amazon, Meta, Tesla, Broadcom, Berkshire Hathaway, and Walmart are worth around $21 trillion together, which is a big chunk of the S&P 500's roughly $50 trillion market cap. Here are my thoughts. I really hope we don't see a repeat of the dot-com bust from the early 2000s. That was a painful time. Many of the high-flying tech stocks dropped like a rock, and some never recovered. Many people back then thought the party was never going to end. Boy, were they surprised a few months later. Some people retired because they had made so much money on paper. Many of them had to go back to work after their portfolios plummeted. Getting back to the article, the author referenced this celebrity investor again who said, when you buy S&P 500 index ETFs because they were told they would pay very little and get diversification in the 500 best companies on earth to ride out storms, but when you buy an index of 500 companies, you're really buying 10 companies with 490 others thrown in. He went on to say, if big tech stocks take a hit, investors could suffer huge losses. He believes amateur buyers face a rude awakening. Here are my thoughts. I think some investors could certainly be in for a rude awakening. Maybe you have noticed that Warren Buffett's advice isn't always what he does. He talks a lot about not timing the market, yet he has a massive cash pile right now. If he is such a firm believer in a low-cost S&P 500 index fund, why doesn't he have all of his cash exposed to the market right now? If he's not a fan of timing the market, shouldn't he have all of his cash fully invested? I'll let you answer those questions in the comment section below. I read some of the comments beneath this article. I'll share some of them with you. The first commenter said, an average investor doesn't have the time and/or expertise to research and buy-sell individual stocks. Investing in S&P 500 is a very sound long-term strategy for most. The next commenter said, this guy is misleading us. Sure, the S&P index funds now are highly loaded to the Mag 7, but if those drop, the index rebalances over time to adjust for that. He ignores the rebalancing. Another commenter said, just buy an equal weight S&P ETF. Slightly lower return, but problem solved. Now, why didn't the author offer that as an alternative instead of gloom and doom? The last comment that I'll share with you came from someone who said, as a CPA that sees hundreds of tax returns a year, nearly 95% of clients that do not invest in mainstream index funds are doing terribly. S&P has returned 8% average yearly, which is fantastic. If you don't live and breathe finance, invest in the S&P. Well, my friends, these commenters always have interesting things to say. What do you think about all this? Share your thoughts in the comment section below. Now here is a sad story. I read this on CNN Business, written by Billy Stockwell, titled, Facebook inflicted lifelong trauma on Kenyan content moderators, campaigners say, as more than 140 are diagnosed with PTSD. According to the author, those diagnoses were made by a doctor in Kenya. These 140 content moderators help tech companies weed out disturbing content on their platforms and are routinely managed by third-party firms, often in developing countries. The moderators encountered extremely graphic content on a daily basis, including videos of gruesome murders, self-harm, suicides, attempted suicides, sexual violence, explicit sexual content, child physical and sexual abuse, and horrific violent actions. Here are my thoughts. My heart goes out to these people who are diagnosed with PTSD. This is serious business, and some of these people may suffer for the rest of their lives. I hope they can process some of this with counseling assistance. Perhaps something like EMDR therapy may help. But what do I know? I'm just some guy on YouTube. I have to wonder, when AI can replace human moderators so people don't have to be exposed to this horrible content. AI seems to be advancing rapidly. Maybe some of these tech companies will be able to make a transition at some point. I read another interesting article today. This one was on CNBC.com, written by Diana Olick, titled, "The Housing Market is Heading into 2025 with a Worrying Supply Trend." According to the author, active listings in November were 12.1% higher than they were in November 2023 and hit the highest level since 2020, according to a new report from Redfin. More than half of those homes, 54.5%, sat on the market for at least 60 days without going under contract. This is the highest share for any November since 2019 and is up nearly 50% from the year before. Here are my thoughts. This is not good news. I can imagine this is difficult for sellers who need to move. They may have to continue paying their mortgage along with property taxes and insurance, utilities and maintenance until a buyer can be found. This slowdown is also not good news for mortgage professionals or real estate professionals who depend on sales to make a living. I realize interest rates are higher, but this is a more normal range. Some people are acting like the sky is falling because interest rates are too high. A lot of people grew far too comfortable in an artificially low interest rate environment. I worry about what is going to happen with the real estate market if the economy slows and unemployment increases. Some Americans may be forced to list their homes to move for new work. Not everyone can work remotely. That trend seems to be dying very quickly. I also worry about people who bought near the top of the market and waived inspections. When they do go to sell their home, the buyers today may demand inspections and refuse to purchase the homes until repairs are made. Who knows what kind of repairs an inspector could identify? Some sellers could be on the hook for thousands of dollars. Many of these inspectors can find a lot wrong with a home, even a brand new home. Just because a home is new doesn't mean the builder's subcontractors didn't cut corners. What do you think about all this? Share your thoughts in the comment section below. If you enjoyed this video, consider subscribing to the channel. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.